Hello traders, good morning, good afternoon, good day, and good evening regardless of where you're going to watch this recorded stream. Alright, so this I want to talk about in this my video today. What I want to talk about, but first let me make myself known to you guys. Some of you that are going to be new or some of you that are new, this is J1FX right here. Alright, so for some time I've not been able to drop some of my videos I used to some time ago for some reasons best known to me. But hopefully, upcoming weeks and months, you guys should be seeing more of my content often. So, if you have not subscribed to my channel and you're still new, please subscribe, like, and share. All right, because I'm going to be dropping a lot of information about how we should have anticipated the future move of the forex market, all right, including gold, Bitcoin, but are we talking more the forex market? All right, so stay tuned with me as I share something very important right here on GBP AUD. Now, this is GBP AUD, so before I start, let's look at the bigger picture. All right, so GBP AUD long term, right? The buy for me is this is the monthly band area. Okay, so long term GBP AUD for me, I am looking at a buy long term. All right, whatever it's going to do, I'm looking at price coming to this area long term. But that is not what I want to talk about. All right, and that's not what I want us to focus our attention on. So what I want us to focus our attention on is the candlesticks. All right, because I believe personally that without candlesticks we are going to have the line chart, but all thanks to the Japanese guy who created candlestick for us to be able to study, understand what the market is telling us, what buyers and sellers participants are doing in the market, for us to be able to take advantage of it. All right, now right here, okay, as you guys can see right here, this was August 1st monthly candle. All right, August 1st. So I'm going to put a vertical line right there. Okay, that's August 1st right there. Now you guys will notice very well that August 1st candlestick was a shooting star, right? Was a shooting star. But then before this August 1st candle sold off from right here to this level, my question is it possible for us to know that when the market was buying all the way from here to the upside, is there a possibility for us to know that the market might, okay, reverse and sell at this area? So I'm going to make this line red as a key level of resistance on the monthly time frame. My answer to that question, okay, is yes. Now you might say, Javan, how did you know? Well, it's simple. Okay, it's simple. How simple it is, I'm going to show you right here. Let me change this color to white. Excuse me, guys. Now we're going to go back in time, okay, to find out why the market actually did fall from that level all the way and form a shooting star candlestick signal. All right, a shooting star candle signal is a reversal pattern, but is not one of the top reversal candlestick signal. Okay, now pay attention closely to my words, are very important. And if you miss anything, please watch the video 1, 2, 3, or 4 times. All right. Now, previously, right here, I can clearly see that since I'm expecting price to go up long term because of monthly bands, all right, the forex market is the only market you can see monthly bands. All right, we have support, we have resistance, we have support. All right, so this support area is already confirming that there was a support here back in time, right? So long term, from the psychology, we're expecting price to go up long term. So the UK and Australia are going to keep their trade agreement balanced in between the bands. the huge consolidation is what we are going to be buying and selling on the smaller time frame. Now, when price came for the resistant area band area here, it sold off, right? It sold off to the support, confirming this area right here. Now, long term, we're expecting price to go back up, right? Now, what happened? Price got to this level and rejected to this area before it took a long time. Now, it approached that area at April 1st, 2025. All right? Now, before the price started selling, we would have anticipated it, all right? Like predict the sell from that area. Why? It's simple. I'm going to say it's simple. For me, you can say, why are you saying it's so simple? It's simple because I have taken my time to study the market to that area. All right. So previously we have support and resistance pivot point right here. So you guys can see. So the market was making lower lows, lower high, lower lows, lower high. All right. Then lower low. So here is an area of interest of key level of resistance. Okay. So now those are the areas we're going to be looking at right here. And back in time, I actually don't want to talk about this area. Okay, I want to focus on this area. So right here we have resistance, okay, and it's an area. So even if I decide to move it like this, it's an area, but I'm just going to stay like this. Okay, so it's an area. The market got rejected here and also got rejected right here. And you can also see that in between this level there was, okay, there was a support, there was a resistance breakout, break in, support right here, this, right, and break to the downside. So here became support and resistance pivot point area, all right, back in time. So we are going to go all the way to talk about this area. So our focus is going to be this current area that was around 2015, all right, August 3rd, 2015, all right, here. Now, before we move to this present area right here. Now, right here, what do we have? What candlestick pattern? All right. So previously the market was trending to the upside. We can clearly see that, know that, all right. After a very long uptrend right here, what happened? The market created what is called an high wave candle. After a long uptrend, an high wave candle formed. What does that mean? At this point in time, it simply means that the market does not have a clear direction at this point in time. With this candlestick pattern that formed on the monthly time frame, there was no clear direction from the bulls or the buyers. All right. Although, if we take a look at that high wave candle, we still have bearish pressure. So if I measure the high and the low of this candle, we're going to see, all right, so I'm talking about this candle here. So when I measure the high and the low, I can clearly see that there is more bearish pressure and than bullish pressure from the wick. You can see that, all right, there's more bearish pressure. Or better still, if I measure the close to the high, how many percentage are we seeing? 3.87%. And now if I measure the open to the what? To the low, right here, I'm seeing 2.24. So which means we have 3, we have 2. So we have more bearish pressure. We have more sellers pushing price down to this level than buyers pushing price all the way up right here. All right. Now that is the first signal, high wave candle. So high wave candle tells us that, hey, there's situation going on right here. All right. There is an indecision between the bulls and the bears right here, but then we have more of the bearish pressure from the seller side. Okay. Now the month that follows the session, what happened? That was September 1st, 2015. The market formed a doji. A doji inside bar Aramic candlestick signal. That's number 2 key signal for a sell that is coming. In this area, we only have the bearish pressure. 1, we have the resistance area. okay, that was coming all the way from here, all right, break to the downside, and market fell. And when price came all the way back here, back in time, it got rejected. So it came to retest this bearish candle, and price got rejected under this resistance area, still on the monthly time frame. And then we have this candle, bearish pressure, high wave candle. We have a doji candlestick pattern inside this candle. It didn't make a new high, neither did it make a new low right here. It just closed in between. Now the trick is this, or the, let me not use the word trick. The concept is, once price closes in between at the middle area, then it's calling for a sell. Now when I measure this high wave candle high and low, I could see that at the middle, the doji candle closes where it closes almost at the middle area. So let's just say middle area. That's the psychology behind it, is a sell. Yes, it means sell is already coming gradually. Now we have three candlestick patterns that is signaling sell. We have the area already as a resistance, that is a sell. So we have 4 reasons that this market, a sell is coming on its way. And then on October 1st, 2015, still, what happened? The market created what I call a hanging man candlestick signal. Now, 1, we want to see the market make a new low compared to the doji low. That's 1. It did make a new low, right? 2, we want to see a body candle close below the doji low, but it didn't happen, right? 3, we want to see a candle closes below the high wave low candlestick session. That did not happen. Instead, when sellers push price all the way down, before the market closed for the month, all right, buyers were able to push price all the way up right here, but sellers make it still in between this middle line of this high wave candle area, and that is where price closes for that session. What does that mean? So now we have hanging man at a key level of resistance, 1, that's 2. We have a doji indecision, all right, at a key level of resistance. It's a warning of an upcoming sell because it's at the level of resistance. That's 3. We have both the doji closes in between this high wave candle. That's what I call spinning top candlestick pattern at a key level of resistance. That's number 4. And inside bar, the same, this doji and this high wave candle form spinning top candlestick pattern. That's 1. And it also form an inside bar. That's number 2. So we have 5 reasons, all right, right now telling us that this market, there is a sell coming right there. Then what happened? Now at this point in time, what the market is telling us, that the psychology or the law behind these candlesticks pattern that are formed right here, is that the most important thing is we want to see price close below this hanging man open right there, that green line. And guess what happened? The same thing. What happened? The market actually did close it very strong bearish candle right there. So the market closes below this hanging man open. That's the signal. That is the real signal for the sell. But then we have more than that, right? We have this bearish candle closing below the doji low. We have this candle closing below the high wave candle that formed the bearish Aramic candlestick signal and inside bar. So once this candle, this bearish candle closes below all of these candles low, that is strong, good reason. 3 reasons, strong one, apart from the 5 reasons that the market is going to sell. So the 5 reasons are like speculation that the market, a sell is coming. Now, when the bearish candle closes below all these 3 candles low, it is 3 strong confirmation that the market must sell. Do you guys get that? Now, when the market reverses from here, okay, it reverses to 50% of that bearish candle. Can you guys see that? So the market reversed, which is a good area to look for a sell. The market reverses to 50% of that bearish candle area, and guess what? The seller stepped into the market and started pushing price all the way to the downside. Now we're not going to talk about that. Okay, now the reason why the current market, all right, we have right now, why price got rejected at this area is as a result of all these reasons that I just explained right here. So you guys want to watch this video one more time and get the notification of everything I have said about all these candlesticks that happen right here. They are very key candlestick pattern, and this is the way the market speaks to us. All right, the market uses candlesticks to speak to us, telling us, be careful, sell is coming. Okay, get ready. The market is ready for you to sell because of candlesticks, the area, the trends. All right. Now, we are talking about the reason why this candle actually rejected from here. Okay, and how we should have noticed the sell when the price comes down to this level. The reason is because of what we have here back in time, and this came here to do what? To respect that area and to confirm it further that there was a strong resistance here, and sellers that sold from here back in time around November 2015 step into the market right here and they push price all the way down. So this monthly candle that you guys are seeing here, this April 1st here, we would have actually predicted it and got it right, that the market is going to fall at that level. Now, if we go to the weekly time frame, we are going to see right here, and this is the market right here, this one right here, right, April, right, and we can see how the market fell all the way to the downside. But now, if we want to cash an early entry, all we need to go, now I'm going back from the monthly, weekly, all the way down to the daily, because we are not going to get the signal that we are looking for. All right, we already know that the market is going to sell from this area. It is heavily bullish at the time on the monthly time frame. All right, the market was previously heavily bullish on the monthly time frame right here. Before the market fell and left us with empty wicks all the way down to this level, okay, empty shadow, okay, previously the market was heavily bullish all the way down to this level. So while it was heavily bullish, if we have this knowledge of this key level of resistance back in time all the way, what we would have been doing is waiting for a signal to sell, and that signal is never going to happen even if the candle was heavily bullish back in time. All we need to do is go to the smaller time frame and begin to look at what is the market. Remember, that's the multi time frame. So on the multi time frame, based on the daily, we are going to see 5 candles. Now 5 candles on the daily is going to create how many candles in a month, right? It's going to create more than, let's see, how many candles is it going to create on the daily? On the weekly is 4, right? Now on each week we have 5 candles, right? 5. And on the daily, so it means for the whole month on the daily time frame, that monthly time frame on the daily is going to print how many candles? It's going to print 5 1 week, 5 2 weeks, 5 3 weeks. That's how many? That's 15. And 5 on the 4th week. That makes it the last week of the month. That's 20 candles. All right, 20 candles. So the market is going to print 20 candles on the daily time frame for the month of yes, let's go back to the monthly time frame. On the month of what? On the month of April. The month of April 2025. On the month of April. Now let's take a look at that 20 candles on the month of April. So right here and right here. So we're going to start, I'm going to take the vertical line all the way down to this level. So this is the month of April. So this is where the candle started from, right? All right. So at this point in time, we can clearly see right here, the market has been buying for a very long time too. You can see the trend, right? The market has been buying for a very long time. and it created the bearish candle, bullish. This we have spinning top right here, the market bought, right? Now at this point in time on the daily time frame, so I'm going to take out my Fibonacci right here. Okay, now at this point in time we guys can see bullish candle, and we have right here we got a high wave candle right here, April 7 high wave candle after a bullish candle stick pattern right here. We got a high wave candle. What does that mean? Remember we talked about this on the monthly time frame 2015. The same scenario happened 2015, right? If we go to the monthly time frame, previously what I talked about 2015, we're going to see that. You see that right here? After this bullish candle we got a high wave candle, right? So we are seeing the same scenario right here on the daily right now. That was 2015, but right now in 2005, right, on 2005 April 7, we are seeing the same pattern, but this time not on the monthly but on the daily. We got a bullish candle, the trend is up, and we got an high wave candle. Guess what? And the market bought after the high wave candle on the 8th. This on the 8th of April 2025, the market bought bullish all the way. But then remember, the market refuses to make a new high, all right, and it refuses to make a new low, all right. Then what happened after that bullish candle? So now we have inside bar candlestick signal. We got the key level of resistance. Now I am talking about how we would have noticed that strong bullish candle, okay, on April monthly candle that was heavily bullish. How we would have noticed that the market was going to sell. We've talked about the area, okay, from the monthly time frame. We've talked about it, all right. Past resistant area, the market confirmed that resistant area. On the daily, we would have spotted the bullish, and then the best came into the market. They sold, and buyers pushed the market and closed it right here to make it a high wave candle. So at this point in time, back in time, this candle is telling us that the market have no direction right here. This is a beautiful high wave candle. That is the methodology behind it. It's a high wave candle, no direction at this point in time. Now the bulls would have actually won the market when they created this bullish candle right here, but unfortunately sellers did not allow them to go beyond this level. All right, now what happened at this point in time? We got high wave candle, warning, stay out, watch. That is a signal, and with a bearish body, it's a signal for us to stay out. And when this candle closes this way, it closes Aramic candlestick signal, inside bar candlestick signal at a key level area of resistance. What does that mean? It means that we should be careful because we might be seeing a sell-off very soon. And if we measure this high wave candle high and the low, okay, we are going to notice that this candle, according to the methodology or the psychology, right here, this is the high wave candle here, this is the middle. All right, once candle closes almost towards the high area, price is going to consolidate, and after the consolidation we are expecting price to go all the way up. That is the law to continue. After the consolidation, the market should continue buying. Now in this case, for me, I won't be expecting a buy. You know why? Because the market is at a key level of resistance. I am expecting a reversal, and the market did not close at the middle. It closed almost at the top area, although it didn't get to the top, right? So at this point in time, I'm expecting a consolidation and then a fall in this scenario. That is what I'll be expecting back in time, because we have a key level of resistance. And let's not forget that the trend was previously up, and after a high, a low must come. That is another reason why I wouldn't be expecting the market to go further to the upside after creating this inside bar Aramic candlestick signal, all right, I'll be expecting a sell. Now, guess what happened? The market bought for a little while. It made a new high compared to the previous session high, but did not make a new high to the high wave candle high. Now, if you are selling, for example, if you are a trader that trades from the daily time frame, this would have been your confirmation to sell. Or better still, you want to wait once this bearish candle, okay, closes. You want to measure the full body, all right, the high and the low, and then you want to make sure you are trading at the 50% area. All right, this is the 50% area. The market did not get there, but then you can decide to sell from anywhere. Once you see price getting towards that area, you can decide to take your position already, and your stop loss goes all the way up right here, and you risk whatever you want to risk. Now, all of this is as a result of knowing and understanding candlestick patterns, the trend, the area where that candlestick pattern is forming, the kind of candlestick pattern the market is forming. It will tell you if it's a buy or if it's a sell. And if it's a continuation of a sell, you are still going to know. We're going to be talking about even when the market is at a key level of resistance and the market is still going to buy, there is a candlestick the market is going to form. We're going to see and still know that, oh, this sell is not coming any moment soon. I think the market is still going to buy, and we are just going to buy. All right, but this time around we're talking about how we would have recognized the sell all the way from the smaller time frame, even when the monthly candle is heavily bearish, and we can do the same thing even if the candle is heavily bearish and the trend was down previously. All right, now we're talking about the reversal, how we would have noticed this and take advantage of it back in time if we actually knew about it. Of course, some professional traders know about this already. Okay, now on the smaller time frame, we would have taken our trades even all the way, because we're going to see the patterns forming on the smaller time frame. For example, on the 4-hour time frame, if we go to the 4-hour time frame right here, I don't know, are we going to get it from the 4-hour time frame? Let's see. All right, yeah. So let me go like this, 4-hour time frame right here. On the 4-hour time frame, can you guys see that? So on the 4-hour time frame, it's more interesting. The market made what I call a double top pattern, right? The market made a double top pattern right here. You guys can see that double top candlestick signals, a lot of candlestick signals right here, a lot of candlestick signals. Once this candle closes below this kind of doji right here, it's a sell. Already, this is a sell from here. If you trade on the 4-hour time frame, the sell will come earlier than that of the daily. But if you trade on the daily, this is where you're going to wait for the market to close the daily, and once the market pushed up and sell bearish engulfing right here, you sell the market all the way to the downside. The stop loss goes through right here, and that is just the way you would have understood and take advantage of the market and just trade the market to your favor, and you're just going to make tons of money in this business. And believe you me, it is difficult when you don't know it, but once you know it, it becomes part of you. You see the market just the way it is, nothing else, but you see the way it is and trade it just the way it is. All right, and this is what I want to share with you guys, and hopefully I'll be sharing more with you guys very soon. So stay tuned with me while I share more candlestick signals, reversal, continuation. All right, reversal candlestick pattern, continuation candlestick patterns. All those candlesticks are very, very important for us to know in order for us to take advantage of the market. All right, so this is what I want to share with you guys. Hopefully you understand, hopefully you enjoy it. So please, if you like it, share, subscribe, and don't forget to hit or smash the like button. I really appreciate. This is your humble Jevan FS right here, your junior analyst right here in the building. So you guys want to stay tuned with me for my upcoming video regarding candlestick patterns. All right, thank you very much and enjoy your day. Bye bye for now.